Hello, master traders. It's so great to see everybody again. So great to see you. I hope you guys had a great weekend, a very restful one. You're able to unplug for a little bit, and now we have a new opportunity, a new week. We are blessed with a new week to experience the next price action that's going to happen to the S&P 500, and hopefully we can trade it and make some money. Now, in my last video, Uncle Charters talked about this beautiful breakdown that we had last Friday, and I tried my best to explain how we traded it and what you guys want to look for as far as entering puts and entering calls. And if you entered puts last Friday, boy oh boy, was it a beautiful move, and I hope you guys made a lot of money. All right, and more is on the way, guys. More money is on the way. So as awesome as Friday was for you, it's yes, your best trading days are still coming, and I'm super excited. But let's take a look at the context here. All right, we broke down this downtrend line, giving us a false breakout setup. We also broke down this uptrend line. We had one touch here from January 13th. Second touch was from February 3rd. And third touch was from February 12th. And we broke that down. So not only is SPY in false breakout mode, it's also in breakdown mode. Okay, so looking bearish. But as you guys know, the price action is always subject to change. The price action doesn't have to do anything. And it can also do what it wants when it does wants to do something. It's our job to follow the price action, okay? Because it's the market makers and the whales, the big money players that are moving this market. But they do leave a trail, and they do telegraph their movement, and it's on us to notice those when they're leaving a trail, when they telegraph their movement. We want to take it, use it, that information to our advantage so that we can make some money, some level-to-level moves, or maybe a home run move. Those are also nice. So how do we do it? We do it based on the charts. We look at the charts, we identify the key levels, and we react to the price action, because the news is going to say something. Your friends are going to say something to try to sway you either to be bearish or to be bullish. But the most important thing you have to listen to as sheep style traders is the price action. What is a sheep style trader? A sheep style trader, they trade both the bearish price action, they trade both the bullish price action. They're unbiased traders, and that's what we are. We are master traders. We don't care if it's to the upside or to the downside. We just want to optimize our trading opportunity, catch that level-to-level move, and let our runners catch the home run. So what are the key levels? Well, first support level I have is at 602, which is a fib level. We lost that level last Friday. We did technically get a breakdown on the daily chart. We're trying to gap up back above it. Gotta be careful here. 602 will be today's equilibrium level. That means above it, bulls have a shot at a bounce. Okay, so above 602, that would qualify as a false breakdown setup. Okay, just like the false breakout setup is bearish, the false breakdown setup is bullish. So above 602, bulls have a shot at a bounce. Clearing 604 and 605.5 would be bullish. Okay, now 605.5 is based on this up green trend line. If bulls can get back above 605.5, they would recapture this up green trend line, and that would cancel the breakdown, giving us reasons to be bullish. Put in 607, 609, 611, and 613 plus, all in play for SPY. Okay, that's the bull case scenario. But the bearish case scenario is just as important, okay? We want to be ready for anything that the market throws at us. And if the market makers decide they're going to be bearish today, they must get back below 602. That's a must. Getting back below 602 will keep Friday's breakdown intact. And then you see the 50 daily moving average. It's sloping up, so it's probably going to get around the 600 area. So break it down 600, break it down 598 would definitely put SPY below the 50 daily moving average, and below the 50 daily moving average is bearish, putting the next fib level at 596 and 592ish in play below. Okay, 602 is the equilibrium level, guys. Above it, bulls have a shot at a bounce. Clearing 604 and 605.5 would definitely be bullish follow through. And as far as being bearish, breaking down 602 fib level and the 50 daily moving average would definitely be bearish follow through. And now that we know the key levels, it's on us to trade it and react to it unbiasedly. Moving on to triple Q, beautiful breakdown we had last Friday. We have a false breakout setup. You guys see from this purple trend line that I have here, we had a breakout on February 13th. It was a beautiful move to the upside. However, it's also a beautiful move to the downside. Okay, right now triple Q's around 528. I have next support at 527. If the plan is to continue to go down, 527 as support must fail, 525.5, and also the fib level at 524 must break down. Below those levels would be bearish, and below 529, Uncle Charters is bear bias. That means I'm favoring more upside if the price can stay below 529. Now that is the equilibrium level for today, because if triple Q can clear 529, and I'll feel more comfortable being bullish if they clear the fib level at 530.7. 529 and 530.7 clears, I would be bullish, or at least favor some type of bounce, because that would send triple Q back above the downtrend line, reset the breakout, if you will, and that would recapture a fib level, put in 532, 534, 536, 537.5, and 539 all back in play. Tesla also had a beautiful move to the downside. I'm praying you guys caught these moves. And if you didn't, hey, it's all good, because there's going to be a lot more trading opportunities coming. There's an abundance of trading opportunities, and you're going to catch them. But to catch them, we got to know the levels. And for today, I have resistance at 336, 338, and 339.7. 339.7 being the fib level. If we are to get a bounce, those levels must recapture. Give us that false breakdown setup to put those those higher targets in play. 344, 346, and 347.5 would definitely all be back in play. But we need to clear, or in this case, recapture 336, 338, and 339.7 for more downside. Support at 334 must fail to put 332, 330, or lower in play. We could drop all the way back down to 325. That would definitely be a possibility if we break down 334 and 332. All right. NVDA, like I said, we had that third test recently. We need to see if what NVDA wanted to do is going to give us the breakout to go higher, or is it finally going to break down support and try to give us that lower high. And it looks like it's going for the lower high. If there is bearish follow through, I have a fib level at 136.5. NVDA bears must keep price below 136.5 and break down 135 and 133.5, and that will put 132 and 130.7 fib level all in play. And those levels fail, we are heading down a lot lower. There are a bunch of gaps, one around the 124ish area, another one around the 118ish area, all possible to be filled if we can break down more support levels. Okay, keep price below 136.5 and break down more support levels. Now, if we recapture 136.5, that's kind of bullish, because that would be a false breakdown setup. Put in 138, 140, and 143 all in play. Above 143, a bottom is in, because that would be a breakout of the down trend line. IWM looking bearish to me as well, and to keep it bearish, they need to continue to break down support levels. Next support levels at 219 and then 217. If those levels fail, 215 and 213.5 are all in play. 213.5 is looking juicy and very possible, but they must break down more support levels. All right, if we want to be bullish, 222 must recapture. I need to see 222 recapture. That's a fib level. It was also a tough buy zone last week. So 222 recaptures, give us that false breakdown setup. Then I would favor more upside to up to 226.4. And for me to favor a bottom is in, I need to see 226.4 clear. That's a fib level. And that will put 229 and 230.5 plus all in play. Apple, while a lot of the ticker symbols were dropping last Friday, Apple was doing its own thing, just popping up. But it looked like we got some selling pressure towards the end of the day. Candles are looking tiny. Couldn't break out that sell zone. Is it time for a pullback? If the answer is yes, all right, couple things bears need to do. They need to keep price below 247 fib level and keep price below 245. That's the 5 daily moving average. Below the 5 daily moving average, bears have a shot at more downside. They're gonna need to break down 243, 241.5, 240, and 237 to get more downside going. All right. If bulls want to be bullish, some consolidation would be healthy, but if not, next levels that need to clear is 245 and 247. If it does, 249 plus incoming. Amazon finally gave us that big move I've been looking for. It took its darn time, but yeah, false breakout setup here based on this orange trend line. Looking bearish to me. Next support levels are 217.5 and 216. If those levels fail, guys, 214 and all the way down to 212.8-ish are incoming. Trust, no bounce. I have a resistant level at 218.5 based on the downtrend line and the fib level at 220. If we are to get bullish, we want to see those levels clear, especially 220, and that will put 222, 224 plus all in play. Otherwise, it's looking bearish. Watch the breakdown of more support levels. All right, and if like I said, it could get a bounce, but if we are going to get a bounce, it needs to come in the form of a false breakdown setup. Recapture some loss levels so we can get the odds in our favor to trade a potential reversal. Otherwise, it's still looking bearish. Okay, Microsoft looking bearish as well after testing that 418.7 level, which is a fib level. The next day, I mean, that day there was selling pressure, but the next day there was definitely follow through. 410.7 is the equilibrium level for me. As long as below, I'm bearish, and breaking down more support levels would definitely be bearish follow through. I have 409, 407, 405. Those levels fail. Get ready for more downside. Trust no bounce unless 410.7 and 412 can recapture. Meta looking bearish as well. Broke down some awesome support levels last week. Led to a beautiful move to the downside. I have next support level at 686 and 684 with 682.5 below. If we want more downside, those are the levels that you got to watch to see if it breaks down. All right, 686, 684, and 682.5 fails. More downside income, and we could go down to the mid 670s. It'll be a beautiful move to the downside. Trust no bounce unless we can recapture some lost levels. 687.5, 689.5, 691 or higher must recapture to put 697, 700 or higher in play. All right, 689.5 and 691 must recapture to get the beautiful bounce back to the upside. Otherwise, we lose more support levels. We're heading down lower. DXY been dropping, but look like it's trying to go for a bounce. I have some new levels to watch. I have one at 106.7 and 106.9. All right, I need to see those levels recapture to put some upside back in play. 107.5 and 108. Okay, next support's at 106.2. If that level fails, guys, we're heading down a lot lower. 106, 105.8, and 105.1 would be targets. Coin, beautiful, beautiful drop. We broke down multiple levels, 255, 250. Oh my goodness. Well, I have next resistance at 239 and 240.8. If you want to play a bounce, you want to see that false breakdown setup, 239 and 240.8. Must recapture to put 242, 246, all the way up to 250 would definitely be possible. This is a pretty volatile stock, but it'll start with the recapture of 239 and 240.8. Overall, bearish below 240.8. So if it get below 239 and break down 237, 235, and 230 would all be incoming. I think we can drop lower than that to the 226s area. But overall, 240.8 is the equilibrium level. Below it, continue to be bearish. Above it, possible chance of a bounce. You want to play it level to level and let your runners play the potential home run move. DOGE is looking bearish. The next support I have is at 23 cents. If it fail, 20 cents or lower incoming, guys. I would look to long if it can get back above 26 cents. I mean, I do have some minor resistance around the 24.8 0.248 and then 26 cents. I would long. I would definitely be bullish in favor of bottom is in above 28 cents. But right now it's looking bearish. And if we lose 22 cents, we are heading down lower. Bitcoin just consolidating, just chopping. It's getting tighter. A big move is coming eventually for Bitcoin. Okay, it's incoming maybe sometime this week. Latest probably next week. But right now it's chopping. The chop range that I'm watching is 95.5K and 98.2K. Watch the break of that range. If you guys are going to place your bets, watch the break of that range. We break above 98.2K, 100K plus incoming. We break below 95.5K, 92 or lower incoming. 92K or lower incoming. All right, guys, good luck today. Let's kick some market makers' ass. Uncle believes in you. Thank you guys so much for being here. I'm so happy I got to see you guys. I'm so happy I got to talk to you guys. This means the world. I love y'all. Peace.